Welcome, everyone. My name's Jason Soman. I'm joined here today by my colleague Josh Shilts. I'm a divorce forensic accountant and business valuation analyst here in South Florida. Josh Shilts is a forensic accountant and business valuation analyst up in Jacksonville. Josh is a colleague, a mentor, a friend, and the purpose of this webinar kind of originated in the comment section of Josh's LinkedIn post. Josh, everyone's talking about the recent bank failures out there, and I think it's really kind of a symptom of a lot of things going on. And Josh posted something about interest rates and pressure, and we started getting into it in the comments. And I'm like, we gotta jump on and talk about this. And I felt that the LinkedIn audience and YouTube and everyone who's tuning in or can tune in later would get value from this conversation. Josh and I are not macroeconomists. This is more from the perspective of two forensic accountants. I think what I was thinking when I saw Josh's post on interest rates and pressure, we're forensic accountants, and the fraud triangle is kind of the cornerstone of what we talk about. The fraud triangle, for those that don't know about it, is kind of the theory as to what explains financial frauds. The first leg of the triangle is pressure, right? Like, people are under an intense amount of pressure. You're seeing banks collapse. And I think that there's a lot of implications. And Josh is also a presenter on human capital, right? So we're dealing with kind of a perfect storm in my eyes, because you're dealing with people who are under stress, right? Their interest expenses going up. You're dealing with employees who are dealing with inflation. You're dealing with human capital issues, workforce issues. Maybe there can't be people to look over the internal controls. There's an accountant shortage, right? So to me, Josh, it feels like a perfect storm that we're going into this next decade, between inflation, interest going up. Tell me what your thoughts are about what's going on. Like, what do you think's going to happen in our industry and to companies out there due to this interest rate pressure?
Well, good morning, Jason. And I'm really glad that you decided to put this together, because I agree. I think there is a little bit of a perfect storm. But I think the clouds have been out there for a while, right? Like, overall, I don't want to say I'm not surprised. I'm not surprised. I'll tell you why. I think when you start looking at interest rate, and we all have to go back to the fundamentals of economics and valuation. So when interest rate goes up, cost of capital goes up. Theoretically, then the valuations start to go down. When everyone talks about interest rates, they talk about the credit side of it. But when you look at the equity markets and how valuations are pulled out of that, I think that's one thing. So for those of us who didn't see this coming, shame on us, right? Interest rates rises, cost of capital rises, and then, like you said, expenses, not just our credit expenses, but just overall expenses have been creeping up for really the last 2-3 years. I mean, the margins have been pressured primarily by human capital costs. So I'm not surprised by that. The things that did surprise me, that we're learning about, that I go, man, that's something we should have thought about, was two things. Credit Suisse had a material weakness over their internal control over financial reporting. So when I hear that, that's not something that just happened. I mean, as a CPA, I was an auditor before this. So this has been known probably by the auditors, most likely by management, for months, right? But more importantly, that internal control weakness. So I'm curious about what that had to do. And then KPMG automatically had that response about, hey, we filed clean financials when it came to Silicon Valley Bank. So there's a lot of news, but where I think we're in it, right? And I say we're in it, Jason, because you and I are small business owners. Most of our clients are small business owners. I mean, most of the economy is small business. And a really good quote when I was watching Fox Business or MSNBC. One of them was, small businesses feel the impacts of recessionary constraints faster than public or large traded companies. So I think a lot of us, we've been feeling this. It's just a matter of now the question of how much further does this go, right? Like that fear. And I think the fear, going back to what you were talking about, is what drove the reaction at SVB. My concern is, where does this go? Especially in a society where we all have a smartphone and we get constant news. We're very reactionary right now. So in a society that is extremely reactionary, is there going to be a reaction that just has a domino effect? That's kind of my concern a little bit more than anything else. I think, as far as what's going to happen, I mean, interest rates are higher. It's going to have a slowdown in economic activity. How long that takes, I don't know, another 12, 24 months. We're already starting to feel it. It looks like the Fed is really focused on jobs. I think that's a mistake.
So, so the last recession, I was in high school, so I'm a little bit kind of, new to it. I haven't been through this like you have, Josh, and I think that a lot of my generation, right, my counterparts, all the 30s and under, like, what are we in for? Like, we've only seen kind of one direction. What is it like as someone who's been there and kind of operated, for professionals, accountants, like, what are we in for in this next one?
Well, you hit a really good point there. I think when you look at Silicon Valley Bank and the demographics of their depositors, you're hitting on something. Younger generation, the volatility. I'm not that much older than you. I'm 41. So the problem is I'm only 41, and this is my second big uppercut. In '08, I was up in New York City. I actually was working at a big four and ended up working on part of the Lehman Brothers liquidation. From an accounting perspective, we're safe, right? There's not a lot of us, and you're going to need the number crunchers and the people that understand the financials. What does it mean for the greater economy? That's what everyone's talking about. And that goes back to, I think if I have a fear, my biggest fear is the baby boomers' retirement savings. When I look at that generation and the amount of wealth they've acquired, well, I also look at the fact that they're living longer, right? And I see a huge opportunity in a supply and demand thing where, us 20, 30, 40, 50-year-olds, we're going to be servicing them in potentially some aspects, especially if you're in healthcare or a field that is related to that, right? Well, that's great. But if the equity markets get wiped and that 401k that was $1 million is now $500,000, that could change spending patterns. So those are the types of reactions, right? That I have fear about. When you start removing wealth from newly unemployed retirees who are supposed to have a significant amount of disposable income, how does that impact the workforce? How does that impact businesses that we do provide? Are we providing healthcare, or is there going to be more debt collection agencies down Main Street? So those are the things that I think about when I hear about the economy. I just, as somebody who's been through it, I'm becoming accustomed to these things happening relatively every decade. Is that something that will continue? I don't think anyone knows, but I know that we're young enough and that we bounce back, right? Like that is a rule of economics that you teach in, but that's also something that I've seen. So my worries are not like, oh, I'm going to be out on the street without a job. I am concerned, like I was saying, that it looks like there's um, some of the fiscal policies are aimed at that. Uh, Facebook just cut what, 15,000 employees, stock went right up, right? That's a different market reaction than we would have had, Jason, 2 3 years ago when Zuckerberg was talking about Meta and capital expenditures. So now in a high cost of capital environment, what's he doing? He's trying to increase his margins to hold that value. So it's interesting. When I'll say this, when things like this have happened in the past, not just in '08, you go back to like early 2000s with .com and then Enron happened. What regulation's going to come out of there? You know, Dodd-Frank was relaxed in 18. So these regional banks, my understanding, I haven't read Dodd-Frank in a while, but my understanding is these regional banks didn't have to submit to some of these stress tests. Are they going to go back to more compliance? So, you know, for people like you and I, we do compliance work, right? What does that mean for us? What does that mean for our customers? Because compliance isn't cheap.
Absolutely. And do we even have enough accountants to do all this compliance? I mean, it seems like things are going to get more complicated, more regulated, and we're dealing with an accountant shortage. So I guess I'm just trying to think about like what can business owners do to try to deal with these bank failures, right? Like what I'm thinking is like customers are maybe a little crunched, you know. And I'm thinking like what I go straight to is accounts receivable, right? Like I feel like you got to collect from your customers because you don't want to be their bank, right? Like, do you want to have exposure to them? I think that, you know, one way you could try to shore up your business is to try to, you know, collect faster because especially with all these workforce issues, like, do you really want to pay employees that you can't find to do work that you don't get paid for? So I think it's really important for everyone to kind of shore up their accounts receivable. And I think what else could people do to you know prevent these interest rate pressures from, you know, employees are stressed, they got inflation, their bills, because I think, you know, what happens a lot of times with fraud is that these are good people, right? People who commit fraud, they generally don't think of themselves as criminals, right? These are people who think that they're good people and they found themselves in this situation, right? I think that's like fraud 101 is, you know, good people are doing things because they find themselves in this situation. So what could you do in your business, do you think, to, you know, kind of prevent these interest rate pressures from breaking your business like it broke some of these banks? Because if it could
You bring
happen to them, it could probably happen to a small business like you or me.
Well, I think you bring up a really good point about, you know, business owners not becoming the financier for the services or products that their customers want, right? So, what can you do to shore up payment terms? What can you do to make sure that your services and products are getting paid and getting paid timely? You know, measuring your AR turnover. On the other side of that, then is what is your payables and how fast are you turning that out? Because that float, depending on the size of the business, could have a beneficial impact if you're really managing, you know, your liquidity and how you hold those cash and those cash reserves. I think also when you're starting to talk about these pressures, and let's go back to, you know, anti-fraud programs, which was a big part of my career, especially after '08. I mean, I was a manager of a, you know, a public organization anti-fraud program. Um, Education is the biggest thing that you can do as a business owner. Just putting up, you know, a poster. But I always tell every business owner, you got to watch your cash. And if that means that you have to take 10, 15 minutes to look at the credit card statement, to look at the bank statement on a monthly basis, it would serve you well to do that type of exercise right now. Now, if you're a larger organization, how sound are your controls? I always ask a business owner, what is your number one risk or what keeps you up at night? payroll, all of those types of things. All right, that's understandable. Those are enterprise risks. If somebody was going to steal from you, how could they do it? Right? I do it in my own business. I think that's a healthy exercise, is to kind of fraud brainstorm. How could Sheila or Bill, my AP clerk, create a dummy vendor? Create a fictitious employee. Those are things that happen. Asset misappropriation, and I've been reading the ACF's uh, uh, report to the nations. Asset misappropriation is always the most prevalent fraud. It's the lowest dollar amount, right? I think it's on average it's 150 or 250,000. That's material to me if somebody takes a quarter mil out of my pocket. Um, but what's always interesting about it is, it takes a long period of time. So it's not like that's a $250,000 check. It's that slow erosion of your profits. And in times like this, when people really start noticing that, that's why you're hearing, when things are good, no one, what's an extra $10 here, $100 there, not really worried about it. Things start to tighten up. Why didn't I get that distribution? Right? The partnership disputes start to really, wait a minute. We spent what on this? But, Bill's in the shop. Sheila's, an investor out of there. Bill's the one who's, paying for his truck on it. So you start to see those types of things. But again, now that's emotions. And how far are you going to let those emotions impact your organization?
Absolutely. And what you just said kind of made me think about divorce cases as well, right? Because, people, home equity lines of credit, those are typically floating rates, right? Like I'm looking at general ledgers nowadays and you see like the interest rate for 2022, their interest expenses like keep going up every month, or wherever they reset. And I think that there's kind of and I think that we're kind of in the beginning of it, because I think that as you have these loan renewals come up and things like that, and people are starting, because I mean, it seems like bank account interest rates now are like what mortgages were a year ago. It's pretty crazy. Um,
I think also, yeah, you're right. In divorce, these financial pressures, and these can be real or perceived. The thing about the media is a lot of people are going to start thinking about that. That being said, I still see a great number of people going on vacations. Um, I'm curious about credit card debt right now. Amex, I just read something yesterday, some news. Amex reported that their delinquency rates were the highest they had been in some important time. So people have been borrowing, right? We live in a credit society. I, would my grandfather agree with that? No. But, today's society, it is not. I don't know anyone who doesn't have a credit card, right? I don't know any business that doesn't have a credit card. Um, so now when you start hearing about, hey, I might lose my job, or bonuses aren't going to be there, or man, I have higher costs because I got to hire this, so I'm not taking home. And to your point, do I have a variable mortgage? The credit card, am I comfortable carrying? All those things start to add up, and that's where these pressures can cause behavioral reactions and angst, and people react very differently. People lash out. Some people, when they're in pressure and they see an opportunity, they take it, right? And that could be stealing, that could be a lot of different things. So I think what's important is we're in a highly tense environment right now, just because of all the news and whatnot. Don't become too reactionary to that.
Absolutely. I think that what kind of drove these, and I feel like we're just, and I spoke about this before, is we just, I feel like we're just in a different era. Like I feel like this kind of also impacts business valuation too, because it feels like, because in business valuations, right, we analyze risk. And it seems like risk for companies nowadays is just, it's hard to quantify, right? But it seems like, obviously volatility is something that we think about, and it seems like, nowadays someone could put out a YouTube, right? Like we could go viral for this YouTube live that we're doing right now, and we could 10x our sales next year. But it also seems like, nowadays, if you say something bad or whatever, your business could evaporate overnight as well. And I feel like it's something that I'm thinking about with just valuation and just business in general, right? It's like you got to be careful out there, and you can't get like too high or too low, because it's just a different environment. Like, I think what made this bank run very unique since the last recession is just the interconnectedness of everybody. I know that Silicon Valley Bank, there's a lot of VCs who are kind of in with each other, so this VC starts taking out money, then the other one, and that kind of spreads like wildfire. Um, and
Well,
I
that's
think,
that domino effect, right? Like that's what I think I saw in '08. I saw that domino effect, and I recognized how the world operates, and then where's Josh Schultz's point in the world, right? For who he is and how everything's going. And I would tell everyone individually, like, listen to everything, but then take stock on who you are, what you have, what kind of work, what are all these things going to do to impact you? Um, but yes, we are truly a global world. I mean, as we sit there today, there's 30 billion coming from banks to go into some other bank, right? Now, why are they doing that? The banks are business, excuse me, they're business partners. They have contracts with each other. So yes, I mean, we are very connected, but like what you're saying is also the spread of news is so quick nowadays. And I think what's different in 2023, which was what was different in '08 and '09 versus 2001, '92, etc., was the spread of news. And with the spread of news and technology, to your point, Jason, goodwill or tangible assets can be wiped away very quickly at a velocity. So the velocity of risk, right? So when you talk about risk, we talk about magnitude of it. What's the dollar amount? And then what's the likelihood of that happening? But one of the things that I remember talking about after '08 was the velocity of risk. How quickly can that risk come at us? And I think that's something that valuators, as well as their clients and managers and owners, need to be aware of right now. How this credit risk out there, how susceptible to are we? And then how quickly can it hit us? And I think you bring up a good point that maybe other business, a lot of times we get hired for litigation or transaction, but you and I have been talking about the benefits of valuations from a consulting aspect. And, one of the things that I do in my valuations is an economic and industry risk analysis and just an overall analysis of that. How valuable to sit down with a business owner and just do that exercise. That's what half days work for us, as opposed to evaluation, which is multiple days with staff involved into it. So, those types of value add things, I think we as a profession need to be putting out there and offering those types of services to our clients to help heed off that.
maybe you could
We,
elaborate on that, because I feel like you put out some LinkedIn videos or shorts or something, talking about value add that business valuation analysts could provide, kind of a advisory capacity. I'd love to hear more about that, because I feel like that would kind of benefit a lot of businesses out there to kind of have like a valuation checkup. Is that kind of what you're thinking, like a
well,
physical?
Well, listen, I do a lot of litigation. You do litigation. Litigation. It's the reason my hair at my age is going the way it is, right? And I enjoy it. But I also enjoy helping people. As a CPA, one of the reasons I actually like that was I get to solve a problem, and I get to talk to people, and we get to solve it together. So, I have a lot of friends who are CPAs or in the finance CFO services I hear about all the time. And when I started thinking about valuations and the reports that we provide, and you got to remember, I come from an internal audit background as well. So risk and controls and all of that and value add, I said to myself, man, like the first 3 pages of a valuation report, the economic industry company analysis, before I get to the financials. And I think sometimes people forget that, like they look at our valuation and they go, oh, we're just number crunchers. No, no, I'm not an economist. I'm not out there, trying to figure out what's going to happen, but I'm dangerous enough to know that stuff, and particularly to look at, okay, here's the economic industry, and here's your company, here's your assets, which are your risk mitigators or your opportunity drivers in a business, and then I'm able to talk to them about how that can impact them. So I think as the world evolves, as businesses evolves, we as forensic accountants and valuation professionals, the marketplace needs to know that we can be very useful proactively, just as we are reactively. And I would tell any business owner that's listening right now, take a look at a valuation report. Most people just look at the number, but if you're a business owner and you're looking at a way like, how does a mid-market company get private equity venture, I guarantee you that private equity company had hired somebody like me or Jason to come in there and talk about that company and say, this is where we see value. For a lot of those private equity hedge fund people, you know they do relatively the same kind of thing we're doing. We could just provide that to the business owner or manager. Just a thought.
Absolutely. I mean, we're always trying to innovate, right? We're trying to add value to our clients where we see it. And I think, how are you? I imagine like site visit. How are you if you see a client that has $10 million in a bank account, right? Like, uh, do you have any advice for business owners that are worried about their banks? Like, do you think that people should be going to like bulge brackets? I mean, do you think you should be spreading it out so you have, 250 or less in every account and have 18 accounts? I mean, I'm thinking about it from a, forensic and divorce perspective, because now I feel like every divorce there's going to be like 80 bank accounts now because everyone's going to be trying to spread out the love.
Well, I mean, the federal government just came out and uh, 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 basically insured everything. So I don't. Again, how are we going to react to that? First of all, if you have $10 million sitting in cash in a bank, the first thing I'm going to do is I'm going to slap you on the hand and tell you you're wasting money, because as uh, excess or non-operating capital to people like you and me is a no-no, right? So if you got 10 million in the bank, I'm going to say, what are you trying to earn it on, and what's this for? I think you need to talk to your institution. I would look at why I have that much cash right in one singular location. Um, I would tell any business owner listening right now, the cash in your operating account should be the cash you need to operate. Now, how long do you need working capital for? That varies by industry and business, and there's a bunch of characteristics. But like Jason said, look at your AR, look at your AP, and you can figure that out. My advice, I don't know, right? Like, do I think there's going to be a major run on the banks? I find that hard to believe considering over the last 15 years. the government's reaction to these crises. Okay, 08, 09, we had the bailouts, we had the pandemic. We all saw what that happened. You're having these issues with banks, governments coming out. The FDIC is coming out. You even now have Congress saying, is that appropriate for the government to do? Questioning the government's role in the free market. So I don't know. But I wouldn't I wouldn't put all my eggs in one basket right now. But that has nothing to do with the bank failures. That just has to do with smart capital allocation.
So I guess how are you approaching your valuations differently than you were, call it 2020, 2021, in 2023, in the era of higher interest rates, inflation, slower projected growth, high volatility? Like, what are the types of, and I don't want to get in the weeds, I guess, like, what are the types of things what are the types of questions, what are the types of conversations you're having with business owners, as with respect to the businesses that you feel like weren't so prevalent, a couple of years back?
Well, and this is more post-pandemic driven.
Mm-hmm.
A lot of businesses that were around pre-COVID and made it through COVID, I'm assessing management's awareness of capital. If they did, what lessons did they learn through the pandemic? How did they take those lessons and apply them to their operations? Because I think the pandemic, in some ways, is a test, right? And you could see, all right, if you had excess capital, what did you do with it, right? That's been my biggest question to business owners. Did you invest it? Did you spend it? And how'd you use it? And, keeping on that same track, Jason, and that same line of questioning, you can see how it would lead to getting some really good dialogue today, right? When we start talking about interest rates and the cost of capital. So, obviously the cost of capital is going to go up. That's going on. You want to understand the company's balance sheet, but I want to understand what they did, right? And I have a good historical record, and I can look at their financial statements, but then I can also talk to management, and I can get a really good sense of feeling of what they learned from that. To me, and I've always said this about a really good professional, whether that's somebody like us, a CEO, whoever, a really good professional is just as much aware of what they know as what they don't know. And so when I talk to what I consider very well-run management businesses, forget the financials. What kind of management do you have in place at that organization? It's interesting to hear how certain businesses said, we relied so much on monthly team meetings, and now we've recognized our meetings were inefficient and unproductive. We thought we were communicating, but now we recognize that we can't. We can do it much more efficiently. So when I look at those types of businesses, I see an upside versus, businesses that the response was, well, we did our best to kind of hang on. They didn't really make any changes. There was no learning from that. Well, now you're going to go through, potentially another back. Look, businesses is peaks and valleys. I've been running my own firm in addition to valuing them, right? It's all about peaks and valleys. How do you learn from the valleys as much as you learn from the peaks, and then react and put those into it? So mature management right now, and mature has nothing to do with age. To me, it's all about awareness.
Yeah, and I think that I know you're very passionate about the topic of human capital, and it seems like that's kind of a focus of your valuations, because it's like, nowadays more and more businesses, they're less tangible asset driven. You don't derive the value of your business from your office furniture. It's really the knowledge workers, human capital, and things of that nature. So I guess what are your current thoughts on the state of human capital? Do you think that there's going to be, some extra slack in the hiring market, or is AI going to start taking some jobs? Or, I mean, what are your current thoughts on reporting live from the ground over there?
So human capital is interesting. I was I'm starting to do some real analysis in the labor numbers. We've slipped. We've lost over the last 20 years. 6% of our workforce is gone. Okay. Now I haven't run the numbers, but I'm one of the things that I want to do a regression analysis is the age of Americans and the birth rate over that 20-year period. And I'm hopeful that that can lend to some pretty good forecasting of what will come. There is less workers. It's what I'm just talking about. There's just less, and the people that are out here working, depending on the industry, right? Depending on what it is, um, their service and their customer is also changing. So my thought on human capital is broad, right? Like that when you just say human capital,
Yeah,
that's
that was maybe
big.
it's not a fair question.
No,
I
no,
think
no,
we
no.
gotta
But let
we
me
gotta dive deeper into it.
well, let me talk about that. So like when I start, let's take human capital like professional services because that really hits home to me. When I look at professional service providers, um, I don't think the traditional operating model is relevant anymore because of size of workforce availability, because of communication habits, because of how training is different. You when I trained, they would send me to Dallas for a week, 9 to 5 every single day. That doesn't work. Doesn't work with my kids. Doesn't work with anyone who's 20. I was watching a football coaches association clinic on YouTube, and Chip Kelly was talking. He was talking about short bursts of information now. So the things I'm talking about are operating model changes because of how human capital has changed. When you start talking about human capital, we are a world of professional service providers. And how astute the customer becomes, or how aware the customer becomes of what you as the provider can do and what your credibility and what they're able to or what they're willing to bear for that, those are the things that professional services needs to start looking at. Because you have less, why is your service better, not volume based? And I think in some respects a lot of professional service providers organizations have been volume based, and what I'm seeing out in the market is just they recognize they don't have to do that. Perfect example is CPAs who have tax practices. I can't tell you the number of CPAs who have tax practices that 5 years ago no one ever said I don't have capacity. Now no one has capacity. And in addition, if you do want me to do your tax return, my price is double. So when I start looking at taxes, which as a professional service provider for many customers view that as a commodity, look at how that's changing. Now, what does that do when you get into niches like business valuation, or let's take it to legal services and you're a family law attorney and then you're a board certified family law attorney, right? So when I start looking at human capital, I look at supply and demand first and foremost, Jason. And I'm forward looking. Does that make sense?
Absolutely, and I think that it's an interesting time because anyone could really kind of just go out on their own. I mean, I know lawyers, for example, they don't have non-competes. Like lawyers could just go set up their own. Like it's not hard. I started my own firm about 4 months ago, and yeah, the execution of it is hard, but the entry into it is not at all, right? Like, yeah, it's hard to execute and to start a firm from nothing with no clients, no relationships, etc. But it all it takes is a website and a computer. And Josh and I always talk about this, and I'm glad we could kind of bring everyone listening into this conversation. But I feel like it's kind of evolving into a franchise model. And as a new firm owner, when I think of where my firm is going to go, I see it look like nothing compared to what the CPA firms of the past look like. Because I just think we're in a different world. I think that the generation coming up behind us is going to shop for services very differently. And I think that's one of the reasons why you and I are both trying to build our YouTube accounts, right? Because we want to, you know, people who are looking for a forensic accountant, people who are looking for a lawyer, I think in 2023 and beyond, they want to see you. They want to get to know you. And that's kind of one of the reasons why I wanted to do this YouTube live and kind of create content. And that's why I'm making an effort to create content, is because I think that, you know, in the era when your employees could just kind of walk out the door, or you're an employee and you have the ability to kind of walk out the door, it's like personal brand is everything. That's your intangible asset. That's your human capital. You know what I mean? And I think it's just, in order for me to succeed as a firm owner, I'm not talking about Jason Soman, the forensic accountant, my job. I'm talking about Jason Soman, the owner of my business, because my job is, the traditional practice, right? I serve clients going through a divorce. I do business valuation. But I think as a business owner, we kind of need to offer something to employees. Like, I feel like my pitch to employees of the future, and I don't have any employees, actually. I have an interview in an hour and a half, but I don't have any employees yet. But I think as a firm owner, I need to come out first and be like, this is what I'm going to offer you to practice here. I'm going to offer you marketing. You're going to I feel like I want to build like a production studio. Like, we're going to blast you everywhere. And, we're going to take a percentage of the fees because we're offering so much. We're providing, leads to new cases. We're providing apprenticeship and training. We're providing social media marketing. And I think that, as a future franchisor, right? Like, I feel like firm owners are going to become franchisors or franchisees. But I feel like in a world, especially, there's a lot of talk about people taking non-competes away, right? Like, if they start taking non-competes away, it's like, I mean, we could try to run from it, and we could try to lock people up in non-competes. But I think you kind of need to, and these are just my thoughts, and they're kind of half-baked. But I think we need to embrace it, right? I think we need to embrace it and lean into it, because we're not going to be able to change it, right? Like, every 10 employees that you hire, like, I feel like in 2023, in the next decade, 10, 20 years, a significant percentage of them are going to leave you and go start their own firms. Or they're going to come for a short amount of time and leave. So I feel like as firm owners, it's really, if not now more than ever, to kind of try to take that personal goodwill and institutionalize it, right? Because you could have a great job as a lawyer, as an accountant, as an engineer, any professional, but as a business owner, I think it's you need to really be thinking differently in terms of how you're building that intangible institutional goodwill in this day and age. I'd love to hear your thoughts about how professional services is going to change, because I think it has to change. I think that the arbitrage that CPA firms, they think that they're just going to be able to get endless supplies of talent, take clients, and then essentially be a clearinghouse between the two and profit from that arbitrage. I mean, when I think of CPA firms nowadays, that's what I think of. I think of them as clearinghouses for clients and employees, right? So I just feel like those arbitrage opportunities are going to start contracting, especially when people are able to walk out the door. It's cool, right? Because I was that employee who walked out the door and literally had zero clients, nothing. All I have is a computer and a social media account, and I'm starting out. I mean, it's it's cool to be an employee, but I imagine as a firm owner, you got to be thinking differently. I mean, I'm new to it. You've been doing this a little longer than I have. I'd love to hear your thoughts, especially in our industry where it's such a personal goodwill. Like, when you hire Shilts CPA, like you're expecting Josh Shilts. You know what I mean? It's tough.
Well, Jason, I would say I don't think you walked out the door with anything because I'm looking at your title. You have quite a few designations.
Yes,
So when you
I'm with you.
no no no, but I want to hammer on that point. So let's talk about personal goodwill. Let's talk about
Yeah,
institutional
absolutely. Let's
goodwill.
go.
As you see underneath me, I have quite a few certifications. I think that speaks to the customer about what we've done to get to where we are to make sure we can provide them the service. Okay. So when you do have a market where customers now, they don't, it's not what firm has been downtown for the last 20, 30 years. It's let me go and see what the Google reviews are. Let me go. Can I talk to this person? Because there's a lot of people that have letters that can't talk themselves out of a box. Well, that's not really helpful when you're in the profession that you and I are in, right? So you have all those dynamics at place. And I think, the storm is, again, we're in a world where, for example, my daughter is 6 years old. She loves competitive cheer. She wants an Instagram account so that she can be seen and become this cheer thing. It's a very entrepreneurial world. And, I had an employee who was in his mid 20s a year ago, and he had what he called side hustles. There's books, how to build your side hustle. So you have, a generation that's much more business savvy. The cost to start a business is much, much more cheaper. So now I take all that information and I put it in the pot and I go, okay, but I'm a business owner. So what am I doing? You got to get back to what is the customer going to buy? And then how do I provide that service efficiently? Right. And that's where the pyramid model, where you had a partner, two directors, three, four managers, 8 staff, and all of that. And my clients don't want to talk to Timmy or Susie. They want to talk to Mr. Schultz, right? Like I am the product kind of a thing. And so it's a matter of at what point in time then, and how do I build the perfect operating structure where there are, because I have a ton of tasks on my list every day, but where can I have Stephanie handle this task for me or Amy handle this task for me, right? And move that out. So we're, as an organization, we're constantly being that arbitrage and getting information, but it's a much more niche and very focused piece of information that we're providing. That's me. I think organizations like Deloitte, the big audit firms, that's concerning. They're going to have to leverage technology. I don't see how they can't, right? Same in the tax field type of a situation. But then I'll say that, when you look at firms and like us, we can't look at the traditional candidate, accounting degree, ready to get their CPA as the only candidate right now, right? So I recognize that my customers have certain needs in it, regardless of what's on the resume in the school and the undergrad. Is there skill sets that I can add to my organization that maybe will complement and give to the customer? Writing skills, right? Those types of things. So I think the pyramid model is just not attainable, or the likelihood of attainable is much, much less. So for me, it's more like a circular operating model where I'm in the middle. I understand that, the customer comes to me and I'm helping them with initial consults, trying to figure out what we're going to do, and then delivery, right? And what are the hurdles in between me as a business owner to protect the business, and then for us to provide the right service. Um, so there's a lot of services that are going to become more based upon the individual. And I always go back to looking at tax services in our field because, again, I bought a tax practice, owned a tax practice, I dealt with that, right? How much of that relationship, how much of that is really relationship driven, price driven, commodity driven in that? Um, and I'm starting to see, um, number one, the supplier of that service being harder to attain, but I'm also then starting to recognize out in the marketplace that I'm seeing more and more people say, "Well, you're a CPA. I really want a CPA. I had used so and so, and they told me they were an accountant, but my books are messed up, right?" So I think for us, our certifications, CPA, ASA, ABV, there's not a lot of people that have that. Those come from very, you know, um, strong organizations. Um, there's just, if you're going to pay, the market will bear what it will.
Absolutely. Josh, this has been awesome. Where could people go if they want to learn more about you and your firm? And for all those who maybe
San
are coming
Jose
at the
Country Club is usually where I'm at trying to work on my golf game. No, www.shiltscpa.com. I would say go LinkedIn. I'm big on LinkedIn, Jason, as you know. And my YouTube channel is at the Forensic Accountant. I'm starting to do that. But yeah, part of what I feel is a responsibility as a CPA, as an ASA is, yeah, I put information out. Yes, it's for marketing purposes, but it's for education. All I'm doing, what I've learned is my marketing is just educating the greater marketplace. So if you're interested, especially at looking things, from a different vantage point, from my vantage point, I would reach us there.
and absolutely, and I don't know how many people are listening right now, but if you stuck through this whole broadcast, we thank you. We're going to be cutting this up, and so like we're going to be putting it on Josh's YouTube. We'll be putting it on my YouTube. Like some nuggets that people could really use and kind of take away from this conversation. So thank you, Josh, for coming on. We're going to do this again. We're a lot of collaborations. We got a lot to talk about. I think we kind of just scratched the surface, and I look forward. Anyone listening now, I'd love to kind of, hear your thoughts. Send me or Josh a DM. See if you have any ideas. I mean, Josh and I are always
Yeah.
looking to collaborate or do something. I mean, the world's always changing, right? Like we're talking about banks that are failing a week ago. There were no failed banks, so there's always something to talk about. And I look forward to these conversations. Thanks, Josh.
Thank you, Jason. I'm really great. I think it's great that you're doing this, by the way.